Hello, welcome back. After knowing the company business model and economy mode, we would like to know what are the risks to our investment case. Even in the best looking companies, there are excellent reasons not to invest in. So we need to look at the full stories and investigate the positive as well as the negatives. So what are the risks that can affect the company? Number one, the industry factors. So these are the risks related to the industry that the company operates at. It can be the company operate in the cyclical industry, meaning if the company operates in the cyclical industry, their sales revenue will tend to go up and down. As a result, the operating profit and the share price of the company tend to be very volatile as well. Next, low barriers to entry. So what it means that it is easy for the newcomer to set up a company or business in the same industry. When the new companies enter the market, this will increase the competition and will take away the market share of the companies. So as a result, this will affect the company's sales as well. Next, overcapacity. So what it means is that the company is operating in a very competitive environment. There are a lot of existing players in the same industry. Every player in the same industry compete on price. If the company decide to raise price of their goods and services, their customer may tend to switch to other competitors. So there are also risks related to the new or emerging industry or substitute of product and services. What it means is that the company products become obsolete or out of fashion. Customer will choose the substitute. As a result, this will affect the company's sales negatively. So what are the risks related to the company? The first one is the financial risk. So financial risks are the risks related to how the company finance their capital structure and how the company manage their finance. The high debt. The problem with high debt is that companies may have the problem to service their debt when the economy is not doing well. Weak cash flow is something related to the company business model. Forex risk is also a financial risk. Let's say the company has large part of their revenue coming from overseas, then any depreciation in the overseas currency can affect the company sales as well. High fixed costs. What it means is that large part of the company expenses are fixed. No matter how the business is doing, company still need to pay these as fixed expenses. So as a result, this will affect the company earnings as well. There are also risks related to the company business. It can be poor management, meaning the company management is incompetent to manage their business, or mismanagement of company financial resources, or taking too much risk in expanding the company business. The other type of business risk is over reliance on the key man managing the company. Let's say the key man is incompetent. This will also affect the company business negatively. The other one could be the poor market or product positioning, meaning the company expand too fast and there's not enough demand for the company products. As a result, the inventory tend to build up and the company may have the risk in the future to write down the inventory. There are also risks related to their company strategy, such as poor acquisition, meaning the company overpay for their acquisition, or there are also risks related to the high supplier or customer concentration. So what it means that large part of the company sales comes from a few or single customers. Or likewise to the expenses side, large part of the expense concentrate on a few or a single suppliers. So as a result, the customer or the suppliers tend to have a higher bargaining power. So let's go to our case study on micromechanics. So what are the risks related to this company? So I have identified two risks related to this company. The first one is the industry risk. This company operates in the semiconductor industry. As we know, semiconductor industry is cyclical due to volatile end market demand. Any significant decrease in the demand for semiconductors could affect the company order intakes of tools. However, I think the risk is not that high because the company products is highly consumable and the company is also operating in a very niche market. Next, I also see there's a forex risk related to this company because half the company sales is denominated in US dollar, whereas the cost is mostly denominated in the local currency where the manufacturing facility are located. So any fluctuation in the US dollars can affect the company performance as well. So it is important to understand the risk to our investment case because these are always the reason why the share price will fall in the future. So next we would like to understand what are the growth drivers to the company because growth drivers will give us the capital appreciation. So I will see you in the next video.